The best moving average strategy to use. Basically, the one that I use is 3 different strategies combined into one. So the first one is a 50 and 200-day simple moving average. What a simple moving average does is it takes the average of closing prices on that time frame. And the 50 and 200 are widely used by institutions, traders. They're just very general and widely used moving averages, so you can expect that you're going to get some pretty good reactions off of them in that, because you know that other people are looking at those and what price does around those. Our strategy for this is you're going to buy when price reaches the 50 moving average or the 200 moving average, and you're going to take profits at swing highs. So let's play through with price. Okay, price has reached the moving average, so we will place our buy right there, and we'll put our stop loss right here. Let's see what it does. So now we have taken profit. That's one good trade. And now we'll move on to looking for our next trade. So here, now we have price above the moving average. So we're going to be looking for price to come back and retest this moving average, and that's where we'll be placing our buy. Our stop loss will be probably around somewhere around here. And let's see what it does. So we're going to place our buy right there. We'll put our stop loss at this swing low. Our first take profit would be right at this high. And then we can extend it so that maybe it is a 1 to 2, so it's a little more favorable of a trade. Okay, so ultimately it did get to our second take profit. It hit both of them, and notice how when it got to this high, it did hit a little consolidation period and then ultimately went up. So that's another example of a trade that worked. Okay, so we'll place our buy, and this is a little bit tougher because there's no real swing low. You know, a safer area would probably be right here, but we're looking to take it to this high. What we're going to do for this one is we're going to let it make a low first. So this would be a better reference point right here if you waited and price also closed above the moving average right there. This would be a better entry to take, and what you would do here is give it some room, but putting it below this low. Let's give it maybe like 1 or 2% more of breathing room, and let's see what happens. It ultimately worked, and that did in fact sort of make a low. It more gave an indication of there was a low coming, because price still took it out, but you gave it some extra breathing room, so it was able to work out. You don't want to be too stingy with your stop losses. You want to give it some room to breathe and give your trade a chance to be successful, because a lot of times where you think something's going to reverse, it may go a little bit lower, but ultimately you'll be right and it'll turn in your favor, and you'll end up missing out on a trade by having too tight of a stop loss. And as you could see with this trade, you could have taken profits at the high, but also it went on even further. It went on for almost a 1 to 5, about a 1 to 5. That is the first strategy of buying when price reaches the 50 moving average and taking profits at swing highs. What I'm going to look at is the 50 period moving average crossing over the 200 period moving average. On daily time frames, this is called a death cross if it's bearish, or a golden cross if it's bullish. So if you see, typically when the 50 crosses over the 200 is very bullish, and the 50 crossing below the 200 typically bearish. Our strategy, what we're going to do is we're going to be looking for buys when the 50 period moving average is above the 200 period moving average, and then we're going to buy at 2 candle closes above the 50 moving average, and we're going to sell at 2 candle closes below the 50 moving average, and our stop loss is going to be at the previous swing low. Let's try a couple. And see how it is. And we would have sold right there. Overall would have been 1-to-1. Okay. And we would have been stopped out there. That was 2 bearish candle closes below the moving average. When I say candle closes too, I also mean bullish candle closes. That's why you saw me pause here. So basically 2 green candles above the moving average. So in all, you ended up with a 1 to around 5 trade on that one. Okay. And we would have sold there. So in all, on that, you had a 1 to 3 trade, but you were also up 1 to 7 at one point. You should be taking some profits along the way if it's really going that high. And then ultimately, you're selling the rest of your position at 2 bearish candle closes below the moving average. If you go very high into profit like that, take profits. Take some money out. Take some money off the table. I promise you, if it gets really far, if price gets really far above its moving average like that, I promise you, it's going to come back to the mean. It's going to come back at some point. It might not be immediately, but it will. So the next moving average strategy we're going to be looking at utilizes the 8 and 14 period exponential moving average. An exponential moving average basically places a bigger weight on more recent price action. So what we're going to be looking for is we're going to look at when the 8 period moving exponential moving average is crossing over the 14 period moving exponential moving average. And then we're going to be looking to sell when there's a bearish cross. So the 14 crossing above the 8. It's better to choose these trades where there isn't big body candles. It's where it's more consolidating and then you get a moving average cross. Those tend to be the best trades to get into. It had a crossover here, but we're more so looking for a break above this high with a crossover, and we'd be looking to get involved. So we got our crossover here, and it almost breaks the high, and now it does. So now we fully have our crossover, and it broke this recent high, and that's how you can filter out some of these trades. When it's consolidating like that, and it's kind of crossing and you don't really know what it's doing, you're looking for when it's breaking a recent high and crossing over. And that will typically give you a pretty good entry on it. So we would have sold there. Almost a 1-to-1. But at the very least, it's a good way to trail your stop losses on your trades. Okay, and we get our bullish crossover here. That's kind of an ugly candle, but we're going to enter anyway and see what happens and manage our risk. And you get a bullish candle after it anyway. You could have waited for another candle and seen what happens, but we're entering on that. Okay, and now we get our bearish cross. And you're out on that candlestick close. So in all, 1-to-4 on the trade, pretty good trade. Could have just taken profits at the highs, but at the same time, it helps because some trades might break highs by a lot and really go in your direction. So that's where it could be a good thing to do. If you're trading options, I'd probably just end up getting out at the highs. If you're trading spot and normal money, then it might be advantageous to wait for a crossover. Now I'm going to combine all of them into a strategy that's worked really good for me and that I think helps find a lot higher probability trades, especially on lower time frames. It helps weed out consolidation periods, it helps weed out a lot of noise, and also give you a trailing stop loss style of an exit. We're going to buy at a candle close above the 50 period moving average and a bullish crossover on the 8 and 14 exponential moving averages. So we're combining those two strategies into one for our entry point. And then we're going to sell at a bearish crossover of the 14 and 8 period. All right, so let's start looking for entries. So right now we're looking for price to break above this 50 period moving average and get a bullish crossover of these exponential moving averages. Right here, we have a bullish crossover and price breaking above 50. So we're going to take that entry. And we did get a bearish crossover here. So that would have triggered our stop loss. We get our bullish close above. Now we're looking for a bullish crossover. So this is our entry. And we would sell. Some trades is tricky, but the good thing about it is it typically provides a good entry point where it's very likely price is going to have a bullish breakout of some sort. So what that could mean is that when you're up a lot, you're taking profits. Here's an entry that we could be taking and exiting there. So this one was good because at one point you were up 1 to 5, almost 1 to 6, ended up with about 1 to 4 trade. So pretty good trade. Okay, not a bullish candle yet. Okay, there we go. Okay, and exiting right there. We can be looking for a pullback entry. Okay, so now that price has crossed below, we're looking for a cross back up and same entry criteria. We had a cross. Now all we need is a bullish candle close. Okay, and it crossed down, and that helped us avoid a bad entry. Now, this is where we would take our entry. You would have gotten out here. Now, keep in mind, at one point, you were up about 1 to 5. So you would have came out about 1 to 4. Still very good. You also want to make sure you do it when it falls below the moving average and is crossing above. Make sure you back test your strategy when you do have one and when you do figure it out before you dive deep into it with your own money. Also, each stock, each pair, each crypto, no matter what you trade, it's going to respond differently to the 15-200 period moving averages. So Apple's a good example because it responds really well. Make sure you pull up the charts and you see how it responds to the moving average and start to follow it before you really start to trade it. I hope that helped. Let me know what you guys think. Let me know what you guys want to see more videos of. That'll really help me out because right now I'm just going off of my own experiences with stuff. So it'll really help. Just comment below other stuff you'd want to see, what you think of the video, what you think I could do better. And I also am starting a Patreon for daily charting. If you want to subscribe to it, I will be putting charts in there, chart breakdowns every week. Also the option for doing it every day. I'll break down anything from stocks, the market, indices, commodities, whatever it might be. So that's something I'm going to be getting into as well. So thank you guys for watching. I appreciate it. Like, comment, subscribe. Peace out.